downshifting in the consumer after the run of the consumer, the NVIDIA-like run of the consumer for the last couple of years, is not necessarily portending. In fact, it's very unlikely to be portending a massive downshift. But more importantly, what the Fed's not allowed to talk about, but you here on surveillance and I and Jay and everybody can talk about, is what happens after the election, right? You were talking a minute ago, Lisa, about whack-a-mole and targeted policies, right? So what happens after the election is probably we get fiscal boom, particularly under Biden. And if it's under Trump, we get a huge energy shift towards go, 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 drill, drill, baby, drill, and internal combustion engines. Either way, you're going to get probably an unsustainable boom in 2025. And I think the Fed's going to have to start raising.
You think they're going to be hiking interest rates again next year?
Yeah.
Really?
Very reluctantly.
How quickly?
Yeah.
And what's the lesson, say, of 2016, 2017, when we were all waiting for those tax cuts? The Fed knew they were coming, but they couldn't change their plans until they actually saw them. Is that a decent experience?
I think, John, that's a relevant example. I mean, because they supposedly the taxes from 2017 are going to expire by the end of 2025. And depending on who's in Congress and who's in the White House, there'll be a very protracted, messy negotiation. But if you're Biden, you have to spend more on defense, you have to spend more on energy, you have to keep spending on the industrial policy. If you're Trump, you're busy pushing out deregulation, tax cuts, whatever it is. Both of them are pushing towards a very big fiscal swing. And whatever result we get on the taxes, it's by the end of 2025, it's not going to be tax rates jumping up.